Okay, good afternoon. It's really a pleasure for me to be here. And, well, let's start. We will have like 70 minutes for the presentation, then questions and answers, but actually feel free to ask your questions during my presentation. If you feel that you do not understand something, just raise your hands and ask your questions. I think it will be maybe even more interesting. So, Russian gas export strategy, it's a very hot and terrific subject. And first of all, just to give you a perspective for this subject, why it is so important and why Russian government is so much worried about it. This is the split of the Russian exports by value. And you can see that actually 70% of all Russian exports, it is energy resources, mainly oil, both crude oil and oil products, but gas also accounts for about 12 to 15% of these exports. And, next slide, yeah. And here, actually, this is probably the most important explanation of the role of oil and gas in the Russian state budget. So 45% approximately of all incomes of the state budget are coming from oil and gas. And look, it is also very interesting to notice that actually gas here provides like 8 to 10%. Main part is still coming from oil. So it is partially mineral extraction tax, partially export duty for oil, but still gas is still essential. And it has not always been this way, 45%. If you look back into the early 2000s, you can see that actually oil and gas were providing less than 10% of the budget incomes. So it is something that happened just recently when oil prices in 2006, 2008 started to rise. Gas prices obviously were following this trajectory. And so here we are, this golden reign first, which was providing actually for the 7 to 8% per annum of Russian GDP growth. But at the same time, this share of oil and gas in the state budget was growing and growing and growing until it has reached nearly half. And then when you've got 50% of all your budget incomes coming from oil and gas, you definitely are becoming very nervous about these incomes, because it is all your military expenditures, social programs, any ambitious plan you have, it will come from this money. So the government is extremely sensitive to any change with these revenues. And don't forget that there were many promises made before elections, and again you need money to fulfill all these promises. The problem is that any additional taxation of oil production will lead to declining oil output. It is heavily overtaxed, and actually out of $100 per barrel, the state is taking approximately $75. So the companies, they get $25 per barrel. For those who are operating old fields in Western Siberia with the lifting costs of $8 to $10 per barrel, it's fine. They still have a good margin. But any new project, either enhanced oil recovery for the depleting fields or any greenfield project when you have to go to Eastern Siberia or to Arctic or to Bazhenov Rock, it's definitely much more expensive than $25 per barrel. For enhanced oil recovery, it would be $50 to $60 per barrel. For Arctic offshore, it would be $110, $130 per barrel. And for Bazhenov Rock and other unconventional types of oil, it's approaching to $200 per barrel. So with this taxation, it won't work. And for Russia to sustain current production levels, which is approximately 10 million barrels per day, it is really critical not to increase oil taxes anymore. So the government has left with the single source of additional revenues, which is gas. Only gas taxes can actually provide for some additional revenues. And it is very important because later on you will see that the government is playing some very particular strategy in gas exports. But trying to understand the strategy, you should have in mind this dependence on gas revenues for the state budget. Okay, so it was just an introduction. Let's now take a look at the global gas markets just to understand their dynamics, what is changing and why actually has Russia to change its gas export strategy, which was fine for the last 40 years. Yeah, Russian gas exports to Europe, they started in late 60s, and then through all these arm race, Cold War, it was quite successful without any conflicts. There was this very famous gas for pipes deal when Germany, first of all, and Italy and France were providing for pipelines, for compressor stations, and Soviet Union was in return supplying quite cheap gas. So both sides were feeling very happy because European countries, they found a market, huge market for their steel production, and at the same time they've got very cheap energy resources. Soviet Union was building this huge pipeline system, simultaneously gasifying European part of Russia. It was like a byproduct of these export projects. But first of all, obtaining hard currency incomes, which were really critical for the country even by that time. So what happens now? Well, we see, if this is one of the graphs from the Global Trends lecture, this is how supply and demand is changing globally. And we see already the first signs of this change in the markets. So what happens? Look, these are OECD countries, developed countries, which used to be the largest and most lucrative and attractive markets. And they were demonstrating actually the highest growth rates. They are not growing. They became mature. They are introducing more and more energy efficiency. They have stagnant or declining population. Their industrial production is mainly moving to non-OECD countries. So actually they do not need too much of additional gas. And at the same time, all the growth, it is concentrated in non-OECD. It is China and other developing countries. So there is this dramatic shift, and we will see on the European example that actually the markets, they stopped to grow several years before the crisis, but nobody mentioned it. All the experts thought that it was just a seasonal, maybe a couple of warm winters and something like that. But later on, if you look back on the statistics, you can see the market stopped to grow in 2006, 2007, actually. And it is a natural process. It has nothing to do with the crisis, though crisis, of course, has aggravated this situation, but nevertheless. And on the other side, on the supply side, you see that, of course, some of the fields, they are declining, they are depleting. There are some additional supplies coming from unconventional sources. First of all, shale gas, very famous story, coal bed methane, coal to gas, biogas, but you see these are very, very small additions, but mainly additional gas demand that will be covered by new conventional fields all over the world. And we will see that actually this club of gas producing countries, which was quite limited traditionally, it is now expanding very fast with a number of new players, potentially very significant players, entering this market. So, what happens with the regional markets? First of all, North America, just to close this question. I remember quite well in 2004, 2006, There were special road shows organized by the US Department of Energy, and they were going through all gas-producing countries and countries which were regarding potential LNG projects, telling them the following story. We are facing huge gas crisis in the US. Prices jumped from $2 per BTU up to $8 to $10 per BTU. There is gas deficit. We will be importing 120 to 180 billion cubic meters of LNG by 2020. That was the story. And Qatar, for example, and Nigeria, they were targeting all the LNG production at the US market, which was quite attractive. And if you remember, Stockman project was initially also targeted at this particular market. But then in 2007, 2008, 2009, it started to become more and more obvious that actually there is shale gas revolution. And it's not just an accidental event, it's a real revolution. Shale gas production in the US has reached 260 billion cubic meters in 2012, so that's a lot. And the whole gas balance of North America changed dramatically. So now we are talking about North America, so it's not just US, it's also Canada, becoming net gas exporters by 2020 or even earlier. Actually, the first projects, Sabine Pass, for example, they've got their permissions for export starting at 2016. So, of course, they might face some delays, but nevertheless, 2016, 2017, 2018, there will be first North American LNG reaching both European and Asian markets because they have good flexibility where to send their LNG. So definitely this market is already closed for any LNG import. And Russia, which was very seriously regarding this market as potential market for its gas, first of all Stockman, but also I have to mention Baltic LNG project, which was developed together with Petro-Canada, and it was targeted at the Canadian market. They were all postponed for absolutely unclear period of time. Nobody knows because there is definitely no market in North America. Okay, it's the first unpleasant news. What happens with Europe? Well, in Europe we see increasing competition. So first of all we see a very, very slowly growing demand. And here I have to say that this demand trend, this black line which you see on this graph, it's probably now one of the most positive projections. So there are other projections, either they are showing flat or even declining trajectory. Of course, European indigenous gas production is falling, and every year Northern Sea, first of all, it's the main area of gas production in Europe, it's losing approximately 20 to 25 billion cubic meters of production, so it's a fast decline. Yeah, so definitely whatever happens, even if Europe has flat demand, there will be increasing import need. Yeah. But at the same time, we see a number of players targeting at this, once again, lucrative and attractive market with high prices, with large demand. And we see here both pipeline gas and LNG coming from Africa, from Middle East, from South and Central America, from North America. LNG potentially could also reach Europe. And then we have this light blue area, which is pipeline gas from CIS, so it's mainly Russia and Kazakhstan. And this dark blue area showing LNG coming from CIS. And you see that actually, we will talk later about it, as gas from CIS is probably one of the most expensive on the market. That's why it's on the top. Yeah, so there is a sort of merit order here. The market niche left after all the other supplies have submitted their supplies to the market, it's not increasing significantly. So I wouldn't say that it is declining, but it is not growing as it was supposed to grow, for example, in the Russian strategic documents. So if you look back into the energy strategy of the Russian Federation, which was adopted in 2009, you would see that Russia was planning to supply 220 billion cubic meters of gas already by 2020. Just for your information, currently we are supplying 140 billion cubic meters. 140 to 120. You see the difference. So all the expectations, both in the domestic gas sector development, in the budget revenues estimations, they were made on the basis of these 220. And now we are facing much lower figures. It's not a drama, it's not a catastrophe. It doesn't mean that Russia has lost the market, so don't exaggerate. Russia didn't lose market. We are supplying nearly the same volumes as we did before the crisis, right before the crisis. But they are not growing. And it's already a problem for the budget, which badly needs additional incomes. Not growing exports, it's a problem. And a few more words about European gas market. It is, if someone 10 years ago would try to develop the most catastrophic scenario for Russian gas exports in Europe, I think he wouldn't imagine such an unpleasant and unfavorable coincidence of different factors as we have currently in Europe. It's just amazing how the things match together. So first of all, we have extremely weak demand, and it is lower than even contracted volumes. So Europe is definitely over-contracted until the end of this decade. It recovers very slowly. In fact, it doesn't recover at all. So each year we see some additional decline in demand. Some years like 2009, 2010, it was like -10, -12%. Now, last year it was -3%, so it's not dramatic, but it's not growing. And many analysts were expecting that it will start to recover by 2013, then 2014. Last year projection of the International Energy Agency was 2018. It will recover to the pre-crisis levels. Today, International Energy Agency says 2020 the earliest. So the situation with the Eurozone, it's really bad. There is no industrial recovery, there is no growth in electricity demand, so of course there is no growth in the residential sector, so there are no drivers for additional gas demand in Europe, and the most problematic thing is in the power sector. So gas used to develop gas demand was growing first of all at the expense of the electricity generation. And actually capacity additions, gas-fired capacity additions in Europe, they were like 90% of all new build capacities during the last 2 decades. So it was definitely the fuel of choice in the power sector. But then what happens? On one hand, we have renewables, which are really expanding fast, and they used to be, without hydro, they used to be like 9% in the year 2000, and they are approaching 16% now. And they have these feed-in tariffs, they have subsidies, they are really, and the most important thing, once they are built, they actually have very low marginal costs. So they will work on the primarily basis. They don't have this fuel component. From the other hand, gas is losing in the inter-fuel competition with coal. I will show it to you. Look here. Oh, it's not here. I'm sorry. Okay, then I'll just tell you the story. It's a little bit boring. Probably the graphs with dark spark spreads, they are sometimes misleading, so I'll explain it on the hands. So if you compare operational efficiency of the gas-fired generation and coal-fired generation, they used to be quite comparable. So the generators, they had this choice depending on their particular circumstances, which fuel they prefer. But now, during the last 4 years, what happened? Gas became much more expensive simply because it's linked to the oil prices, and the oil prices in 2006, they started to grow. So $100 per barrel oil, it's really very expensive. It's something nobody was thinking about just 10 years ago. From the other hand, coal became much cheaper than it used to be as a result, first of all, of a weak economic situation globally, so there was oversupply of coal, and in particular some visible amounts of coal came from the United States, because shale revolution in the United States dropped prices for gas in the United States, and gas in the interfuel competition started to squeeze coal away. Nobody wants to close coal mines. You understand? It's first of all, it's a social problem. It's a problem for those cities. So they are currently working with nearly zero margin. They are sending this coal to Europe, to Asia, first of all to Europe. They've doubled their exports to Europe. And so this additional supply of North American coal, it has led to much lower coal prices compared to gas prices. So I have to say that there is a very significant difference between oil and gas markets. Oil demand, it's not elastic. So when the prices are rising, even from $25 per barrel to $100 per barrel, what we observed just recently, people do not stop to fuel their engines, their cars, because they don't have any substitute so far. But with gas, the situation is quite different. Gas is always facing very tough interfuel competition. And when gas prices are becoming unfavorable, gas is simply replaced by the other fuels. So what happened in Europe? Gas was replaced by renewables, first of all, with the state support, and by coal. And it has led sometimes to really ridiculous situations when new, extremely efficient, just built gas-fired power plants in Germany, in Belgium, in the UK are closed. And instead of that, the generators are utilizing old, dirty, outdated coal-fired power plants. So it has nothing to do with the European plans on CO2 reduction and green energy and so on, but in the crisis, actually people are driven by extremely pragmatic considerations. And for the generators not to get bankrupt, they have to do this. So they do not have too much choice, especially if you take into account that European electricity prices are quite low compared to what generators were expecting to have in the market. Plus, if you add to that when the crisis started, industrial output in Europe dropped. And so the price of CO2 allowances dropped as well. There was no demand. There was oversupply of these allowances, and so the prices, which used to be on the level like 30 euro per ton before the crisis, now they are just 5 euro per ton. So you understand that this final additional tool to make gas more attractive than coal, or to make coal less attractive, it doesn't work at all. And now you have to increase CO2 prices. It's an estimation of the International Energy Agency. You have to increase it up to 80 euro per ton in order to make gas competitive with coal. So you understand, nor Commission nor any national government will be ready to increase CO2 price that much, because it will be a real threat. It could kill completely the industry, which is weak even without that. So this picture with the demand is quite disappointing. There is a problem. There is very, very weak demand, and there are so far no drivers. How could it recover? Gas either has to become like 40% cheaper, which is a big problem because there is no cheap supply of gas available, or gas will prolonged to lose the market. That's the problem. Or there should be some very strict regulation on coal-fired power plants. Some of the countries, namely UK, are introducing this sort of regulation, and there is this large combustion plants directive, which actually it puts such a strong penalty on the coal-fired, first of all, power plants which were built before, I think, 1983, that it's cheaper to close them than to use them. So in the UK it is expected that, and this directive, it comes into force in 2014, so it's not so long to wait to see how it will work. But in the other countries it is still under discussion, and many of them are not ready to introduce such a rigid regulation. So it's an open question whether there will be some administrative decisions from the European Commission or from the national governments which could help somehow gas to recover, or it will be until the real recovery starts, and who knows when it will start. So that's the picture with the demand. Yeah.
Quick question. You mentioned that American coal is displacing gas in Europe. To what extent is Russian coal displacing Russian gas?
You know, the problem is it's not very widely discussed, but actually Russian coal is also squeezed away from the European market by the American coal. So it's not just gas which suffers, Russian gas, but also Russian coal. Russian coal has a problem. It is mainly produced in the eastern part of the country, and then production costs are not very high. But then you have to add huge railroad tariff, which more than doubles the price of this coal. And so it's always working on the margin. So when the prices drop even a little bit, it is just, yeah. So now actually Russian coal is mainly rediverted to the east, to the Chinese market. It's not expanding in Europe.
Yeah, one related question about demand. Germany, as far as I know, already shut down 8 reactors, and 9 will be out of service in 7 years. And how to compensate for this work? Since Germany is one of the key players, it might stimulate demand for us.
It was a hope for Gazprom for maybe a year, and it was discussed like, wow, there is a positive effect among these, there is some white line in this dark cloud of the European demand. But then it became clear that actually Germany is going to replace all these capacities by renewables. And it's going on with introduction of additional renewable plants. So if you take a look on the list of the power plants under construction already in Germany, and those plants, there is just a few gas-fired. There is, I think, 8 or 10 coal-fired, and even those working on lignite, which is very dirty coal, very bad quality coal. And the rest, like 15 to 20, these are renewables. So for Germany, it is part of the energy policy to promote, first of all, renewables. And even, I think it was Alexander Medvedev citing this German new energy policy, saying that the word gas is not even mentioned in the document. So it's also an important part of the game. Actually, Europe, both European Commission as a legal entity, and also the market players, the companies, they are not very much in favor of gas. So it happened that gas actually doesn't have any stakeholders lobbying for it. There are no gas companies left in Europe. We have energy companies which are producing electricity using gas, coal, renewables, and nuclear, like E.ON, for example. For them, optimizing their portfolio is the first priority, not gas exactly. For the European Commission, more gas means more dependence on Russia. And so it is fixed in all strategic documents that the priority is to diversify imports, to diversify energy mix in order to reduce import dependency on one single major supply source. Guess what it could be, this single supply source. So unfortunately for gas, there are no, except for Eurogas, which is association of gas companies, at least those companies which regard themselves also as gas companies. Nobody is trying to promote gas as a fuel of choice, as a transitional fuel, as it was actually advertised like 10-15 years ago. Now it's a fuel of conflicts, problems, high prices. That's its positioning for the public, unfortunately. So, moving from the demand story to the regulation story. Regulation, it's even worse. So, first of all, we have this third energy package and unbundling. For Russia, it's really a huge problem because starting from the year 2002, when Alexei Miller and his team came to Gazprom, they were immediately told by the president that, look, there are too many intermediaries, and while you are selling your gas to Europe, price on the border was like $120 per 1,000 cubic meters. The final price for final consumers was like $500. So where is the gap? The president asked, and told Gazprom to build vertically integrated chain. And so Gazprom really started to go downstream. There was a strategy moving downstream in Europe. And once they've built everything, they built numerous companies, and they've invested in the pipelines and in the underground storages and in the retail companies and so on. They found out that actually under unbundling they cannot use it as a vertically integrated chain. So the whole strategy became obsolete. But it's not the whole story. There are Nord Stream and South Stream, and I think you follow all this discussion currently between Gazprom and the European Commission, whether Gazprom might have an exemption from the third-party access rule or not. But look, these are enormous money. So just imagine building Nord Stream. I think it was like 15 billion euros. Yeah, you've built it, and then you cannot actually utilize it on its full capacity. You have to utilize it at half capacity. So 7.5 billion euros are just gone. Yeah. And it is similar threats are facing South Stream. There is a very complicated legal dispute, and I think it has only started. Russian Ministry of Energy pretends that all these intergovernmental agreements for the onshore part of the South Stream, they were signed before third package came into force, and that's why, according to the Vienna Convention, it has priority on this national regulation. But I think it will take a lot of time and a lot of effort from different lawyers to settle this dispute. Meanwhile, there is this legal gray zone, and nobody knows how it will function. So the risks are extremely high, and if you calculate these risks in financial terms, in the billions of euros, they are just tremendous. Then we have gas target model, which is a next step in the implementation of the third energy package, and which actually is still under development. It describes how the markets will work in the future. And these are, the main idea is to move from the, deliveries from the national borders to the hubs, virtual hubs mainly. The question is what will happen with Russian long-term contracts, which are all nominated to the national borders. So nobody knows, and there are no answers, but there are risks. So all the regulatory stories so far, it can be regarded as huge growth of the risks, legal risks for Gazprom in Europe. If you add to that also investigation which was initiated by the European Commission against Gazprom, like under the anti-monopoly department, accusing it that it abuses its market power. So you can see that actually the situation is extremely unfavorable, and the problem is that all this regulation, it's already third package, third directive, yeah. So it's changing actually every 3 years. So regulatory uncertainties are huge, and even with gas target model, it has to come into force in 2014. We still don't know what is inside. So there could be huge surprises on January 1st, 2014, when suddenly they find out that there is the next huge threat which they didn't even take into account. It's a problem. Next problematic area, of course, it's pricing. It could be the first one, actually, maybe the most important. So first of all, spot volumes in Europe are increasing very fast. Before the crisis, before 2009, the share of spot indexed gas supplies in Europe, it did not exceed 20%. It was really low. If you remember that the UK market is completely spot-based, so there was actually no other spot trade, serious, visible spot trade in Europe. During the last 4 years, the share of spot indexed gas supplies reached nearly 50%. Nobody can say the figure for sure because this gas is resold and you don't have the detailed statistics on that, but approximately 50% on the market is supplied based on the spot prices. It does not necessarily mean that it is exactly spot price in the contract. Usually they are just writing an average spot price for the quarter. Yeah. And other 50% they are still supplied under this Groningen formula and oil products indexed prices. So you can understand just from the common wisdom point of view, this situation is not sustainable. When you have two different prices for the same market, for the same good, it's not sustainable. Something has to happen. And the majority of the European stakeholders decided already that they want spot indexation. It's not necessarily a rational choice, yeah? Because if you look back into the dynamics of spot prices and oil indexed prices, there were periods, quite long periods, when oil-linked prices were lower than spot indexed. But it's already the question of preferences. European companies, European consumers prefer to have spot-based, and they believe it to be more fair. And what is also important, European Commission now stated that it also believes it to be more fair pricing, and it is becoming a part of this investigation, the idea to prove that oil-indexed pricing is not competitive by its nature. Yeah, it's also very important, though the very name of this oil-indexed pricing, Groningen model, yeah, so it comes from Netherlands. It was the formula developed for the Groningen field in 1950s. The idea was to provide such a price of gas which would, from one hand, give maximum profits, but from the other hand, make gas always more attractive than oil products with which gas was competing on the final market. So the pricing issue, it's a real problem. I will show you a couple more slides on that later on. And also supply. I wouldn't say that it is already expanding, but there are huge expectations that it will expand. So now it's an economy of expectations. New LNG producers are coming to the market, diversification of the pipeline sources like Southern Corridor, and potentially some gas from the Middle East, and potentially some additional supplies from the North Africa. So it's all under discussion, and there is a feeling that there will be more gas supplies to Europe than we have now. So There are some, it is very important to separate gas market conditions for the next 3, 4, 5 years and for the longer term. I would say that yes, in the longer term, this thing and this thing and this thing, they will work. And most likely there will be really additional supplies available by 2020. But currently in the market is actually becoming more and more tight. It's not widely discussed, because it's also a politically sensitive issue, but actually Europe is already facing a sort of gas deficit. After this LNG glut, which it had in 2009, 2010, and there was a feeling that there was a lot of LNG available around for Europe. Now, actually in 2012, LNG imports to Europe dropped by 25%. All this LNG was diverted to Asia, and you can see these here, these yellow part. These are LNG volumes which were contracted to go to Europe, but according to these contracts, companies can divert them to the other markets if it is more profitable. Of course, if you have...
Very quick question. The key at the bottom, what is MCQ and
MCQ, it is minimal contractual quantities, it is take-or-pay volumes. ACQ, it is annual contractual quantities, it is the whole volume of the contract. It is just typical abbreviation of the gas contracts. So you see that currently this part of gas is already going to Asia, and then so the market is becoming quite tight. It's just balanced, there is no oversupply on it. By 2015, it will reach balance between contracted volumes and demand. And then we have some minor gap, which could be theoretically covered by some LNG suppliers if they were available. But the problem is that before 2017, actually, there is no new LNG available on the market. You remember, North American LNG will start 2016-2017. Australian LNG will come on stream also 2017. So there are no new projects currently available for Europe. So that means that actually there is a period of time, probably I would say even until 2018, 2019, because usually all LNG projects are showing some delays. It's just the nature of industry. They're huge and it's very difficult to manage the time. So I would expect that actually until the end of this decade, Europe will remain as a deficit market. And in this deficit market, Norway, which cannot increase production anymore, you know, they've conquered market niche during the recent years, and I think last year they had even larger gas supplies than Gazprom, but it was not for free. I mean, after that they had to put Troll on maintenance. It's their major field, because sustaining such high production volume is a problem. These are also depleting fields. It's not easy for them. And yeah, there are some new discoveries in this former gray zone between Russia and Norway, which was demarked. But it will take time before these deposits will be developed, and most likely they will just replace falling production on the existing fields. So generally the feeling is that Norway will more or less sustain current volumes, but it will not be able to deliver something on top of that. Algeria can hardly fulfill its export obligations currently, so it's working on maximum capacity, but still it cannot deliver additional gas. Egypt, you know, probably the case, it's already like a case from Manuel. With the growing domestic demand, they actually started to reduce LNG production because they need this gas domestically. They cannot afford to export it for social reasons. Don't forget Arab Spring and so on. Libya. So if you look at all the suppliers which Europe currently can rely on, you can see that by the end of the day there is nothing available rather than additional Russian gas. So it's a paradoxical situation, and it seems that not all European politicians has realized that actually now, in the brighter future post-2020 there will be other options, but right now the only option is to increase Russian gas supplies, while Gazprom realizes it very well. So this is the reason for Gazprom's price behavior. And now we are coming to this question of the gas export strategy. So what is the strategy? And actually it is on remaining high oil-linked prices. Because when your customer doesn't have other choice rather than to buy your product, when there is actually no competition available on the market, you would prefer to have higher price, which is understandable. And don't forget, it is the market which is not growing, so even if you start dampening and lowering your price, you will not get additional supplies. So from just economical point of view, if your target is revenue maximization, and remember this slide with the Russian federal budget, of course it's the main target today, right now, to increase budget revenues. So it's understandable that it's not just Gazprom's strategy to protect oil indexation. It's also the strategy of the state. The state needs money. It cannot afford to give some strong price discount. Though I would say, actually Gazprom is providing some discounts, and you see that the prices, contractual prices for Russian gas on the German border, and actually this differential between spot prices and contractual prices, it's decreasing. Why? Because Gazprom very slowly, through very painful negotiations, is providing some price discounts for each particular customer. And they've passed already through maybe 4 or 5 rounds of these renegotiations during the last 4 years. Sometimes it is just price discount, like 10% discount. Sometimes it is retroactive payments. Sometimes they are just changing coefficients in the formula. So there are different mechanisms, but the main message can provide you some discount, assuming bad situation on the market. But this will be only under the framework of long-term oil contracts. So once the situation of the market recovers, we want to have oil indexation back again, and it is a principal position of the Russian government. We will come back to that again. Now I would like to have a few slides on Asia, because, well, if everything is so bad and disappointing in Europe, if there is absolutely no market in North America, where can we send our gas? Well, the logical answer is yes, to Asia. It is growing, and look how booming it is. It's like nearly exponential growth, and China has shown 15-17% per annum of gas demand growth. So it's just terrific market, but here some buts are coming. Actually, if you take a more detailed look at Chinese market, which is usually discussed as the best option for Russian gas, you will see that, in fact, it is already overcontracted. So you see these orange zones. Until 2020, actually, China has more gas supply available. They've contracted more than they need. And only by 2025 there will be some market niche on the market, but at the same time it could be 42 billion cubic meters, it could be one pipeline from Russia, or it could be like 5 regas terminals. And you know that actually China is building these regasification terminals very fast. So they will have a choice whether to take LNG or pipeline gas from Russia. So, and don't forget, they are also trying to develop their own shale gas resources. So far, it's not very inspiring. Of course, there are quite complicated geological formations, and there is a problem of water for hydrofracturing, especially in the desert regions. But still, they are in the early days of the application of this technology. By 2020, the situation could change. Chinese are really very good in learning, in duplicating technologies, and how to apply them. So you can see that actually China is not very much in a hurry to get additional Russian gas. So okay, if it comes at an attractive price, in the desirable volumes, why not? It's a good source. It's very good in terms of energy security, because Central Asian gas is crossing not very calm regions. LNG, they could be theoretically, they are crossing Malacca Straits, they could be controlled by the US 7 fleets or whatever. Russian pipeline gas without any transit countries, just from eastern Siberia coming to northern regions of China, it's perfect from this point of view. But at the same time, not at any price. Only if Russia will provide a competitive and attractive proposal, which it can't do, because eastern fields, Chiyanda, Kavykta, even Sakhalin gas, they are quite expensive. It's not cheap Cenomanian gas like in Western Siberia. These are deeper horizons, and this gas, from its content, it has really high content of helium, and according to the Russian law, you have to extract it and store it. If you remember physics, inertial gas, it's very difficult and expensive to store it, because it's just diffusing. Yeah. It has natural gas liquids, so in order to put this gas in the pipeline, you have first to put it in gas processing plant to extract all these liquids, to extract helium, to store it. So from the very beginning, you have to develop more, you have to invest much more in upstream. You have to develop quite extensive midstream with all these gas processing facilities, and Russia didn't build any gas processing plants for more than 2 decades. So they are really expensive. It's like oil refinery. It's a lot of investments, and it's complicated technology. And then you have to build the very pipeline, which Gazprom is showing currently fantastic results. Average cost of pipeline construction in Europe, which is not a cheap place to build anything, is about 3 million euros per kilometer. Gazprom is showing 7 million. So even in the European part of Russia, when it was building Russian part of the Nord Stream, and the same figure actually for Sakhalin-Khabarovsk-Vladivostok pipeline. So Gazprom builds quite expensive pipelines. So if you put all this together, expensive upstream, expensive midstream, expensive pipeline, then the price which, break-even price which Gazprom can deliver on the Chinese border, it is quite high. And so there is no available cheap Russian gas for China. But China doesn't need expensive gas from Russia right now. So that is the paradox, and that's why all these negotiations between China and Russia on gas deal, they are lasting for like 10 years. Another consideration is that Chinese are trying to obtain equity share in the upstream, something that Gazprom is just nervously refusing, saying never ever. Yeah. So Chinese are just waiting, okay, maybe you will change your mind, maybe there will be more favorable situation. Meanwhile, constructing LNG gas terminals and negotiating with the Canadians on equity shares in Canadian upstream to have its own LNG supplied to China. So you see, I wouldn't say that the situation is completely desperate, and there is quite a high probability that this deal with Chinese could be signed even before the end of this year, because there is a very strong desire from the Russian side, I would say even an order to do this. But at the same time, Alternatively, it could take additional 5 to 7 years because Chinese side, as I said, it's not much in a hurry. Another market which also seems from at the first glance to be very attractive for Russia, it is OECD Asia. LNG market in Japan and South Korea, the highest prices ever, like $16 to $18 per BTU, and slightly rising demand as a result of nuclear phase out in Japan. And at the same time, look, the supply is declining. First of all, because Malaysia and Indonesia, which used to be major suppliers traditionally in the region, they are now becoming net importers. They need this gas for their own needs. Malaysia just built its first own gas terminal, so it's quite funny situation. Not funny for Japanese, of course. Theoretically, there is this huge market niche available on the Japanese and Korean market. But, again, there is this but. If you take a look at this red part, which is US and Canada, they are already contracting their LNG. And I would say that this red part, it is maybe already like this. It is expanding very, very fast. So American LNG is really an attractive option both for Japan and for Korea, not just from the economical point of view, though it is also from the economical aspect. The buyers are hoping that it will be Henry Hub index and that Henry Hub will be low with shale gas. It's an assumption and we can discuss how justified this assumption is, but at least they hope that it will be cheaper than the other supplies. But also from the geopolitical point of view, for Japan, having supplies from North America means additional support, additional ties with Americans, which is good. While with Russia, you remember, Japan even doesn't have peace agreements still, and there is island problems, so there are many problems. So there is still a window of opportunity here in this Pacific LNG market, but actually it is closing quite fast. All these developments occurred just during the last year and a half. All this North American LNG story, it's very, very recent one, but they've already succeeded in signing nearly 60 million tons of contracts in total, both for Europe, for Asia, and for portfolio contracts. 60 million tons for US suppliers, and 7 million tons, that's all that Russian companies succeeded to sign. So you can compare, it is the speed of decision making, the negotiating position, pricing mechanism, because Americans from the very beginning started, it was Chernier which first adopted this scheme, tolling scheme, when liquefaction plant is getting just a fixed revenue and the price is directly transferred from Henry Hub price. It's something completely new in the global LNG industry, I would say. So there is opportunity open still at this market, but Russia has to hurry in order to get there. So that's the global picture, and you see that actually it is changing in quite an unfavorable way in all the markets where Russia is working or is willing to work. And so what else happens here? On the supply side, I promised to show you, these are all these North American and Canadian plants. Not all, actually, there are more of them. These are most serious. Of course, not all of them will happen, but even if half of them comes on stream, it will be the second Qatar. These are these contracts which North Americans succeeded to sign already, and you see part is supplied, oops, my God, where is it? It's jumping, sorry. Yeah. Part of this gas is supplied globally, this yellow part goes to Asia, and small part goes to Europe. And this is Australian LNG capacity build-up, also very impressive. So in total, that's what's happening with the global LNG market. So you see there was this first wave of LNG capacity additions right in 2009, 2010, 2011, which has led to all these LNG oversupply and price reviews in Europe. And then it seems that we will have something similar by the end of this decade. So again, for Gazprom, there is a clear rationale to use the situation right now to get as much revenues as possible, because later on it will be much more difficult and the competition will become even tougher. And there is a lot of gas globally which can be produced at quite acceptable price. Then there is a question of transportation. This is just lifting cost. But nevertheless, there is a lot of gas. There are new discoveries. There are new discoveries in Middle East, in East Mediterranean, in East Africa. So with gas, it's not as mature as oil. And plus, don't forget about unconventional gas. Its production will start also in Argentina, in China, in other parts of the world. Australia is very inspired by this development. So it seems that there is a lot of gas available theoretically in the longer term. Once again, not tomorrow. Tomorrow there is deficit, but in the longer term, it will work. And so in the longer term, it is the result of our modeling on the global gas model. It seems that the prices in Europe, they are supposed to drop by 2020 when all these new supplies will come to the market. In Asia, in North America, they are supposed to be stagnant. So just to sum up, remember, markets which are not growing, or if they are growing, they are not providing huge growth for Russian exports, and stagnant prices. So for the budget revenues, it means that actually there is not a lot of hope to increase them significantly. A lot will depend on the Chinese deal, because it could theoretically deliver additional 40 billion cubic meters of supplies. That's why it's so important for the government. That's why the government is so nervous trying to promote this deal. Elsewhere, it's very problematic to increase somehow supplies. And so what's the Russian response to this situation? Just again to sum up, I went already through these issues. So historically, Russia was dominant regional supply, which was using dumping. Because Soviet Union, it had very low lifting costs. So this gas was, it was simple Sinomanian gas, very easy to extract. Of course, there were some costs for transportation, but extraction was really negligible. And so the country could afford these lower prices. Starting from 2002, when Alexei Miller came to Gazprom, he actually changed the strategy from price dampening and getting as much share as possible. They switched to price maximization strategy. And again, it was quite successful. By this period of time, oil and gas revenues started to increase considerably. And it was at the same time unique period in the European market when simultaneously volumes of export were growing and prices were growing. It's not a typical situation, but for 6 years there was an impression that but then the crisis came and the show stopped. And so then the strategy became, it's also price maximization, but in a little bit different manner. Minimal price adjustments. So minimal possible price discounts for the consumers. Okay, we will give you this price discount, but it will take you a year to negotiate it. And we will do it only in the framework of oil indexed contracts. That's the strategy. And here Russia became a sort of regional swing producer. It could not be a dominant supplier. Actually, last year it was Norway, which exceeded in terms of volumes. But Russia said, well, it didn't say it, but it acted like this. Okay, we will decrease volumes in order to sustain prices. We want oil index prices. It's the key. For 1 or 2 years, we can survive with lower volumes but high prices. But then, as we know that you do not have any other options, we will increase volumes and we will actually recover our revenues. So Russia is becoming, amazingly, a sort of Saudi Arabia in gas. The difference is that Saudi Arabia has very low costs for production, while Russia is now entering in more and more expensive projects like Bovanenkovo, Nord Stream, South Stream. So I'm not sure for how long this strategy will be sustainable without problems for the balance sheet. But so far, what we have is price maximization and swing producer. That's our market positioning currently, though it's not articulated clearly. And it's just an illustration to the thesis which I was already promoting, that actually for Europe currently there are not so many, actually there are no options of gas supply available in the next 3 to 4 years at least. None of these can be delivered in such a short time frame. Oops, sorry. Yeah. Also, there is in Europe there are very high expectations concerning North American LNG. I think this graph is very disappointing for these expectations, because if you compare it from the American point of view, and Americans are very skeptical about gas supplies to Europe. Actually, when we were discussing it with them, no, maybe sometimes some seasonal supplies, some arbitration operations, but generally, of course, Asia is providing much better margins than Europe. And similar situation is for the East African LNG. You know, there are huge discoveries in Mozambique and Tanzania, and there are also a lot of expectations. New huge LNG plants are under discussion. But again, for them, it's much more profitable to send this gas to Asia, where, as you remember, there is a large market niche for LNG still, than to send it to Europe. And so this is, now I'm quoting the leaders, that Gazprom has chosen, and it was a strategic choice, to maintain high profits. So not to maintain volumes, but rather to go for revenues, for high prices. That was the decision. And there is one additional factor which should not be neglected. That is the contract portfolio which Gazprom has already. As you can see, these blue columns, these are annual contractual quantities, so overall contract volumes. These red columns are real supplies, what happened in reality. And you can see that during the last years, in reality, Gazprom was supplying exactly at the minimal contractual quantities, which is take-or-pay obligations, approximately 75% of annual contractual quantities. So in order not to pay additional penalties, consumers prefer to offtake this gas. Some of it, the part which they do not need, is resold later on the spot market, bringing prices at the spot market even lower. It's such a funny situation. But nevertheless, Gazprom's offtake, it's approximately according to this orange line. And you can see that if it will go on in the same way, even by 2020, Gazprom has guaranteed 120 billion cubic meters of exports to Europe. It's nearly the same as they have currently, Plus, on top of that, they always have some spot sales. Actually, Gazprom is selling about 20 billion cubic meters in UK, in Belgium, at the spot market. So anyway, whatever happens, they are more or less guaranteed that they will have at least current levels of supplies. Plus, if we assume that there will be some deficit on the market, even temporary deficit, it means that Gazprom will be in a position to increase its export volumes. And in fact, if you take a look at the Gazprom statistics, export statistics this year, they are saying preliminary estimation for this year is 160 billion cubic meters of export. And yes, really, in the second and third quarter, their supplies to Europe were increasing very fast because there is no other gas available, once again. So when this discussion about oil indexation and spot indexation is raised, there are arguments for Gazprom both in favor of oil indexation and in favor of spot indexation. Once again, it's very difficult to say what is the fair pricing. It's to a large extent the question of your fate. I trust that it is spot indexation, for example. So if you look at the commercial reasons, what is more beneficial for you, then it seems that at least for the next several years, for Gazprom, oil indexation would be much, much more attractive than spot indexation. It doesn't mean that Gazprom will never refuse from oil indexation. So probably by 2020, when there will be much more tough competition and the situation will be less favorable, then it will have to adjust. But not now. They do not want to, like they say in Russia, run before the engine. So just waiting. It's a good strategy, actually. The problem is that if you have this price-oriented strategy, not volume-oriented strategy, then there is a question, why do you build that much of transportation capacities? So here you see all the capacities built up, pipeline capacities to Europe, Nord Stream, South Stream, and even with the annual contractual quantities, actually by 2020, these capacities will twice exceed them. At minimal contractual quantities, it's even less. So there is, to my understanding, the major inconsistency that, okay, profit maximization, it makes sense, it's a reasonable strategy, but don't invest in large pipeline projects then. So there is just single explanation for these investments, it's to bypass Ukraine. And I think now the current situation, of course, it will be used to refer, look what happens there, of course we have to bypass them somehow. But still, it seems that there could be other solutions to this transit issue, let's put it this way. So that's what Russia is doing in Europe, protecting oil indexation. In Asia, Russia is, first of all, it's in negotiations, trying to settle this Chinese deal, and as I said, it's critical for the government whether it will or will not get these additional revenues in this decade. This is Chiyanda gas field, this is Kavykta gas field, so the pipeline could go this way, actually in the corridor, in the same corridor as oil pipeline ESPO goes. And the very idea is very similar, not to be too much dependent on the Chinese side, to build one leg to China and another leg to Vladivostok for liquefaction plant, so that you can then play between the consumers. And of course LNG projects. With LNG projects I have a separate map. Actually, you know that just a week ago a new regulation was adopted, law on LNG export liberalization, which was quite a historical event for Russian gas industry. For the first time, non-Gazprom producers were granted this right to export gas outside Russia. And I think it's also part of this adjustment strategy, because the government realized that for Gazprom, which is really very much dealing with the pipelines, with Bovanenko, with the domestic market, it's very difficult to carry simultaneously so many projects. So they are delaying. There was this postponement of Stockman field, and therefore these two fields, Yamal LNG and Sakhalin-1 project by Rosneft and ExxonMobil, so they've got this exemption. Probably there will be some other projects in the future, though I have to stress it's not a complete export liberalization. It doesn't mean that tomorrow you can come with a pocket of money and say, I want to build here an LNG plant. No way. You have to be either Rosneft or Zarubezhneft or Gazpromneft or Novatek, which developed fields in Yamal. So either offshore operations or Yamal areas. So it's not that easy, but nevertheless, it's much more than Gazprom alone. So there are at the same time two LNG projects by Gazprom, which is Baltic LNG and Vladivostok LNG, and probably Sakhalin-2 expansion, which theoretically could be the cheapest way, actually, and the fastest way to increase LNG production, but it won't be purely Russian LNG project, so it's not that welcomed. And frankly speaking, despite harsh climate conditions and geological conditions, actually Russian LNG projects are more or less competitive, at least on the first glance, just cabinet estimates. So if they will manage to control costs properly, then these projects are more or less fine. At least they are not more expensive than US LNG and not more expensive than Australian LNG. Not as cheap as LNG from Qatar, but cheaper than the other new options. So it is, summing up, these are three pillars of the Russian gas export strategy. Price reviews with minimal adjustments under the oil indexation framework, Eastern development, first of all, pipeline to China, and LNG development, first of all, through these new non-Gazprom players projects. So it seems that for Russian gas, there are still many opportunities on the market, though getting these opportunities realized is accompanied by huge challenges, and these challenges started already to change the institutional structure of the industry. And probably they will bring us to more changes also domestically, not just in the export strategy. So I'll stop on that, and your questions, please.
First of all, thank you for your presentation. I really enjoyed it. My question is that this year, Statoil announced that they will be switching all of their contracts to spot market pricing. I would like to know what you think this will do to the European spot market price, and what you think it would do to Gazprom's export strategy.
Mm-hmm. Good question. Actually, I think Statoil made this decision in a very proper time. If they would do it 2 years ago, they would lose a lot of money. But now, if you take a look at the spot prices, actually they are going up. Again, just from the market fundamentals, if you have a tight market with not many supply options available, yeah, even with a stagnant demand, the prices will go up. So most likely, at least in the winter season, prices for gas, spot prices, they will be, well, not very high, but at least somewhere in the range of oil index prices. So Statoil is not losing anything through switching to this spot indexation, but at the same time, it's acquiring an image of flexible, market-oriented player, which takes into account the needs of the customers, something which Gazprom is definitely lacking. So for Statoil, it's also a good situation to enhance its own positioning on the market. I don't think that it will somehow affect Gazprom's strategy, simply because I've tried to explain that this strategy has a very serious basis behind it. It's not just Gazprom being so nasty and reluctant to any changes. They've calculated and they see that it is more profitable for them now. So, any other?
You said that China doesn't need Russian gas, the nation isn't there yet, but in the future it might be. Why did Turkmen gas get to China, and why did China seem to have such a need for Turkmen gas, not Russian?
Well, with Turkmenistan, let me show you just this picture. Where is my Turkmenistan? Yeah, here it is. So these red, dark red parts, this is Central Asian gas. It's not just Turkmenistan, actually, it's a little bit of Uzbekistan and a little bit of Kazakhstan as well. Here you have already 65 billion cubic meters. So it's not just the first contract which CNPC had with Turkmen gas in 2009, which was like for 9 billion cubic meters, then it was expanded for 30. Here it takes into account also the recent deal which was signed this autumn, which is actually expanding total volumes up to 65 billion cubic meters. Further growth is actually problematic. So it's already the question of resource base available in Turkmenistan. Turkmenistan has more or less recovered to the Soviet volumes of production. So to further increase them, theoretically it's possible, and you know there are huge new discoveries made, this southern Eola field in Turkmenistan. There were many disputes on how justified these new resources are. Gazprom doubted, and auditing companies were proving that yes, there could be 12, maybe even 24 trillion cubic meters of gas there. You see the range, it's too high to believe that it's properly estimated. Though anyway, there are huge formations, but it is, this gas is on the depth of 3,000 meters. So it's much 3 times deeper, more than 3 times deeper than traditional fields like Devletabad, Danmes, and so on. And it has very high sulfur content. It's a peculiarity of Caspian gas. It has a lot of sulfur. So on such a big depth, you have very high pressure and you have sulfur, and it makes, it's not just a proportional increase in the costs. Actually, the costs are going to be very high because any equipment, any metal is immediately corroded with this sulfur under such pressure. So you need different technologies. It's possible people are extracting gas even in more difficult conditions, but it's more expensive, and you have to apply the technologies which nor Turkmenistan nor China actually have. China started to develop these fields, and there were already several accidents there simply because they couldn't handle these technologies. So I don't think, in fact, that it could be done fast with low costs. By the end of the day, finally, maybe by 2020, of course, they will develop these fields. But by this time, they will only be sufficient to compensate for the declining production on the Soviet era old fields, which are actually, they are as old as Russian Urengoy. Of course, they are declining. So I don't think that there is a chance for China, just based on the reserve estimate, to increase significantly imports from Central Asia. more or less they've reached a plateau. And also, I don't think that they are willing to increase these imports. Chinese, as you can see, they are building, they have extremely well thought energy policy, and they are building very well diversified portfolio of import contracts. It's domestic gas, of course, including conventional gas and unconventional gas, and also offshore gas. Yeah, it is pipeline from Myanmar, it is pipeline from Central Asia, potentially pipeline from Russia, and numerous sources of LNG supplies. So it's a good strategy, and now they are in such a position that they are looking around, searching for the best supply option. They can afford to wait for this best supply option.
I'd like to ask you about the domestic Russian market. How do you think higher domestic gas prices in Russia will impact the country's export?
It's a good question because it's another market which I didn't mention. So North America, Europe, no growth. Asia, well, potentially if you do your best. Domestic market. For a period of time, it was very popular to say, okay, if they don't like us, if they don't want to have our gas, we will switch to the domestic market. And here we have a huge potential for growth. But what happened during the crisis and after it, actually domestic gas demand stopped to grow. It is just stagnant. It's not growing at all since 2009. And so, you know what happens with the Russian economic performance. This year we will be really happy to have 1.4% of GDP growth and nearly zero industrial output growth. So of course there is no gas demand if the economy is in stagnation. It's very similar to the European situation. But at the same time, there is increasing competition in the domestic market. So traditionally we had just Gazprom and a little bit of Novatek. Now we have Gazprom, ambitious Novatek, which is willing to bring its production up to 100 billion cubic meters, and also ambitious Rosneft, which also has the same target of 100 billion cubic meters production by 2020. Well, with Novatek, it's more or less natural growth through the new field development. For Rosneft, it's to a large extent mergers and acquisitions, and partially also natural growth. But nevertheless, we see that Gazprom is losing its share on the domestic market, which used to be in good old times like 85%. Now it's less than 74%, and it will further decline. Just because these new market players are also very influential and active and aggressive and providing price discounts. So actually for during the last couple of years, both Novatek and Rosneft were supplying domestic customers, cherry-picking the best among them, large industrial consumers with the highest prices. So they were providing regulated price minus 5 to 7 to 10% discount. So it's understandable why the consumers were switching to these new suppliers. So for Gazprom, it's not an easy situation, but also for the other suppliers, so the situation is not easy because the domestic market is not expanding. They have to struggle for each new customer. The competition, it's normal competition actually. Well, it is supposed to be by the end of the day. So far, it's more like a oligopoly, when they are dividing their markets and so on. But the problem is that on the stagnant market with no growth, it's very difficult to justify price increase. Actually, domestic Russian prices have reached already the level of the USA. So there are no extremely cheap Russian gas prices. They used to be in 1990s, even in early 2000, it was a reality. But now we have absolutely North American price for gas. It's about $130 to $140 per 1,000 cubic meters. And industry is screaming already, saying that any further price increase will lead to further industrial output decline, which will mean negative industrial output growth. So as a result, the government decided to freeze prices for gas for the year 2014. They are not growing, and most likely it's not decided yet, it's just under discussion, but most likely there will be a period of much lower gas annual price increases, probably with the rate of inflation. So like 5 to 6% annual growth, though historically it was 25% starting from 2007 until 2011, and then it was 15% per annum growth. So now most likely it will be 5% per annum, so just to keep a more or less flat.
With the increasing competition in like the European market with Statoil not supplying a lot of Europe, what is Gazprom doing to market its brand? How to market itself in terms, what is it doing in terms of PR, maybe lobbying in different countries?
Oh, good question. Well, Gazprom has several contracts with major PR companies, and they are financing football clubs. What else? So, I mean, they are putting quite a lot of quite expensive efforts to promote themselves, but I'm afraid that negative image, which is to a large extent result of people regarding Gazprom as a political tool, not just as a commercial company, it is very difficult to overcome. And it's very difficult to explain to anybody that, look, Ukrainian crisis 2009, if you were supplying gas to somebody who doesn't want to pay it, finally you will switch him off. Logically, yeah. But immediately the other side would say that no, 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 it was also pressure on Ukraine for, and then, you know, the wording. So I'm not sure that it's just a problem of Gazprom. I would say it's a problem of image of Russian Federation.
Thank you again for coming today. You talked quite a bit about Russia and China's relationship and Russia's relationship with the European Union. I was wondering if you could spare a few words on Russia's relationship with Turkey, in particular looking at the Blue Stream pipeline and what the possible fate of Blue Stream is and their continuing relationship with Turkey.
Well, Blue Stream was a fantastic story, actually. It was the first among all these numerous pipelines which we are now looking at. And where is it? Lost it. Yeah. Yeah, here it is, blue, of course. It was, they started construction, I think it was 2002. And the first problem Gazprom faced was that demand in Turkey was overestimated. Absolutely the same situation which we have now in Europe. First, we faced it in Turkey in 2002. Price formula was wrong, and there was then a long dispute trying to settle price. So as a result, finally Gazprom had to give Turkey a good discount. But then this pipeline, it remained underutilized until the very recent days. So the capacity is like 16 billion cubic meters per annum. It was utilized at 8 billion cubic meters. From time to time, when Iran, for example, was failing to supply contractual volumes to Turkey, Gazprom was asked to compensate for that, and then utilization rate was increasing, but these were quite short periods of time. And so I wouldn't say that it is an example of the most efficient project I've ever seen. Plus, there were many corruption scandals around it, both in Russia and in Turkey, and actually ENI also participated somehow in all these stories. Well, Turkey itself, it was very strongly increasing gas use during the last 10 years, and until recently it was providing probably the highest growth rates of gas consumption in Europe. But at the same time, Turkey in its own energy strategy is also repeating all these absolutely correct words about diversification, both of the supply mix and suppliers, and again refers to these mysterious dominant single supplier dependence on whom it would prefer to reduce. So there were very painful price disputes in 2011 when Turkey actually stopped 2 contracts. It refused to re-sign them as Russia refused to give a price discount. So for like half a year these contracts were terminated. Then they were signed already not with BOTAŞ but with the other companies, because you know Turkey is undergoing market liberalization and there are new entrants to the market. So it was not easy at all, and I think it's still not easy. Turkey is trying to diversify its supply options, and you know it's not only Azeri gas, yeah, but it's also all these potential supplies from Iran, from Iraq, Arabian pipeline. So Turkey is trying to position itself as a European, South European gas hub. More importantly, in many negotiations, Turkey was trying to become an intermediary, buying old gas on the border and then reselling it to Europe. It's something that Gazprom just hates. Yeah, so it's not an easy relationship, but at the same time, Gazprom was very happy when Turkey provided this permission for South Stream construction through its territorial waters. And Gazprom is very interested in participation in the underground storage construction and gas-fired power plant construction in Turkey. There are problems with the nuclear power plant construction, and it's also something in the relationship between Russia and Turkey which is affecting gas deals as well. Oil pipeline. So there is a complex of different factors. It's not an easy relationship. I wouldn't say that everything is rosy, but they are working, and I think they will work together on that, because anyway we are too close and it's too beneficial to work together.
I have a question about South Stream. So last week, the European Commission came out and said that bilateral agreements regarding South Stream between Russia and EU countries were illegal and have to be redone. My question is, first, what do you think will happen next? I mean, what are the moves each side has? And the second part is, do you see any significance in the timing of the European Commission's announcement following Ukraine pulling out of the association agreement?
Oh, I thought you will ask European announcement of the Gazprom investigation. I think it will be much more critical, frankly, for the Russia-European relationship. With the Ukrainian accession, well, Russia, of course, is involved somehow, but it's more of a EU-Ukrainian story. Yeah? With the South Stream further development, as far as I understood from the recent statement of the Russian government, I think it was Ministry of Energy, they are going to apply to the European Court. I think European Commission will also do something similar, so it will move this legal issue on the priority of different agreements. What is more important, intergovernmental agreement between Russia and every single country, or European legislation, which also like a supranational regulation. So there is no straightforward answer. Yeah, it has to be worked through in the courts. So I think the sites will go to the court, and then it will take a couple of years just to settle it. Meanwhile, Gazprom will just build it.
Maxime?
Well, actually, I prefer, there is another question about political economy because I wanted to ask something different. So.
Okay. So, Jack? Okay. Michael?
What do you think will become of the European case against Gazprom? Will they settle out of courts?
I think that finally, look, maybe it will sound very cynical, but when you are facing winter time and you do not have any other supplier capable to deliver gas, you will be quite cautious to fine him 10% of his turnover. So I think that it will be settled. So there will be some evidences found, definitely, because we know that Gazprom has quite different prices for different consumers. But then I think Gazprom will be just forced to correct the contracts. And that's it, I think so. At least at the current stage of the market development.
I also have a question. Thank you for your presentation. Really interesting. Actually, my second question was what Nick just asked about what the European Commission said about South Stream. But my first question is, what is your reading on Gazprom agreeing to actually apply the third energy package with regards to South Stream back on October 31st on the Ministry of Economy, Energy and Tourism in Bulgaria? They released information about agreement with Gazprom and with the Russian side that actually South Stream will not be exempt from the third energy package, and the Japanese consortium will also have access to the pipeline. So, what is your reading on the strategy with regards to what you spoke about? Thank you.
I think that Gazprom still is working on its strategy with the South Stream because they do not know for sure how far European Commission will go and how far will be the court decisions on that. So in the worst case, in the very worst pessimistic scenario, there could be just 2 lines of South Stream ending in Balkans, not going further. And then it will be, so there, any third-party access wouldn't mean significant losses for Gazprom in this case. I think they will just adjust to the situation.
Well, I guess as a follow-up question, since you spoke about the strategy of Gazprom in general, not to give any discounts, to actually use time to push negotiations, do you think that the fact that they agree to actually allow third-party access is read in Europe as a weakness, and that's why the following statement that the contracts are illegal came up to further push Gazprom? Do you think?
Could be. You know, when it comes to this exchange of statements, there is so much of a policy inside and just a little bit of economics. Yeah, so it's difficult for me to comment on that. Of course, there is a part of a political pressure on the other side. From the other hand, well, certain third-party access could be theoretically acceptable, very unpleasant, but acceptable by the end of the day. But first they will resist, of course, as long as possible.
Student.
Okay, so you've already talked about the feasibility of the Eastern gas strategy. confusing. One of the other goals of the strategy, though, is to further develop the Russian Far East. And I was wondering if you could speak, if it's not too far out of the scope of your presentation, if you could speak to the effectiveness of the strategy and actually developing the Far East.
Well, good question. Yeah, it is one of the rationales standing behind the very strategy, that it's not just providing gas for exports, but it's also developing local industrial production, provides employment for the local population, and also provides gas for the gasification of the region, as well as for gas-fired power generation. So, but the problem is that, as I said, it's an expensive gas, and so far we have this example of gasification of Far East region with gas supplied through Sakhalin-Khabarovsk-Vladivostok pipeline, with the consumers being quite skeptical about this gas, and only after the federal government has provided special subsidies, quite significant subsidies, it started to work. So in the interfuel competition, in the pure interfuel competition, local Far Eastern coal is of course much more competitive than this gas delivered through pipeline from Sakhalin. Well, the government can apply subsidies if it's supposed it to be justified, but I'm not sure that it's really the best way to develop energy supplies of the remote regions and locked regions. So I think to a certain extent it's exaggerated. I mean, this impact, this multiplication effect of gas supplies in the region. And with the industrial consumers, look, this Eastern strategy, for example, it was prepared, I think it was 2006, when they were high GDP growth rates, and it was, let's say, a little bit different country than the one we have now. So there was a number of industrial projects in Far East which could use this gas, but they are now postponed or terminated, and there is no such industrial demand in place at all.
Jack? Yeah, so a question about Ukraine, really. And it's a kind of a two-part question, really, thinking about Russian gas transit via Ukraine and Ukrainian demand for Russian gas. The graph that you have there suggests that obviously we know that Gazprom's European exports were around 160 billion cubic meters last year. We also know that transit via Belarus, direct supplies to Finland and the Baltic states, Blue Stream and Nord Stream, put it all together, you have around 120 billion cubic meters. So the difference is around 40 billion cubic meters. Right? And then obviously, even if South Stream is built at half capacity, that could still be 30 billion cubic meters, which leaves just 10 billion cubic meters for transit via Ukraine, theoretically speaking. Yeah. So clearly, if Gazprom is pursuing this, one of the things that they need to do is to renegotiate their gas transit contract with not only with Ukraine but also with Slovakia. And conversely, obviously, Ukraine is desperately trying to reduce its imports of Russian gas, and quite successfully as well. Yeah. Back in 2011, Ukraine was the largest importer of Russian gas in the world. And I think their half one imports in 2013 were less than 10 billion cubic meters. I think they'll probably import around 18 billion cubic meters this year. I'm quite skeptical as to the progress that they might make with shale gas production over the next, say, 5 years. If we talk medium term in 2018. By 2018, we can probably expect that even if South Stream is built at half capacity, Ukraine will still import maybe 50% of its gas imports from Russia, and then maybe 50% via Slovakia, from Poland, or Germany, whatever. So my question really is, do you think that there is the possibility that Gazprom can use this situation to renegotiate its gas transit contract with Ukraine and get out of its kind of commitment until, I think, 2022, right?
2019.
Oh, 2019, sorry, yeah, it was a 10-year gas transit contract. And so maybe they can like bundle this renegotiation of gas supply and gas transit contracts with Ukraine, and potentially even with Slovakia as well.
Well, it could be quite probably with Ukraine, especially as Ukraine is not fulfilling its take-or-pay obligations. Gazprom actually can any moment say, sorry, no transit obligations from our side. Yeah. With Slovakia, I think anyway, with the gas target model implementation, actually all transit contracts, all transportation contracts you have, they will be renegotiated, and not necessarily in the way that we understand now.
Yeah.
So it will definitely change, but we don't know how it will change. And yeah, it will be really very pity that this unique Ukrainian transit system of 120 billion cubic meters will be just, I think, who said it, Alexander Medvedev or Alexei Miller, just metal, corroded metal, that's it. That's really pity, but I'm afraid, you know, it's the situation when physical assets are becoming victims of the political problems.
So, I mean, do you think that's a reasonable assessment of the situation that we can expect in 2018? That you know, Ukraine it's obviously reducing its gas imports. It will import some volumes from Europe, but not all.
I'm not sure about imports from Europe. I think it was already reported just recently that actually the price which Ukraine has to pay to Slovakia, it's nearly already the same time as Gazprom. Yeah, because as we were talking, spot prices in Europe, they are raising, and there is no cheap gas available inside Europe. So I don't think that there will be a special charity fund to supply Ukraine with cheap gas. Not. So where are they going to get this cheap gas from? I'm more thinking that Europe will decrease further its consumption, because still there is a lot of space for energy efficiency, as well as in Russia. We have very similar energy sector structure. They will replace part of gas with coal, which is also possible and not so difficult. By raising domestic prices for the population, they could reduce consumption in the residential sector, which is quite considerable. Offshore and onshore local production, it could be at least 20% high, and it's just a shame that they didn't increase it yet. And I think it's a result of all these vested interests and corruption schemes and so on, because the resource potential allows Ukraine to produce much more domestically. They could produce, let's say, 27 to 30 billion cubic meters locally without any problem, and it was fixed in all their strategies, but they didn't achieve this figure. So anyway, I think they will import some gas from Russia, maybe lower and lower and lower volumes. Yeah, but I don't think that there will be such a significant supply, a visible supply of gas from Europe.
Yeah, I think they get around 6 billion cubic meters, right? 6 or 7 right now, and they think that if they renegotiate something with Stream in Slovakia, that they could improve this to maybe 17.
I would say that it seems to be below 10. To my mind, Europe will simply not able to provide these 17.
So if that's the case, obviously the balance of power between Russia and Ukraine, in a situation where Russia is completely not dependent on Ukrainian transit, but Ukraine still imports a significant, in terms of its total imports and consumption, a significant amount from Russia. Do you think this will influence maybe some of the...
It could, it will depend. It will depend also on the market players which will supply this gas to Ukraine. Because I think it's becoming more and more obvious that Rosneft and Novatek are interested in this market. So it could be non-Gazprom supplies, and it could be a solution of these just dead end which they got in. And because for them, for Rosneft and for Novatek, even $170 is a good price. 220 is just perfect. So there could be some other solutions.
So is this essentially a repeat of Belarus in 2004 with ITERA?
Yeah. And actually now Rosneft is extremely interested, and they are negotiating these exports to Belarus instead of Gazprom.
Thank you very much. Maxim?
Hey, okay, thank you. Well, my question is actually not from the political economy domain. It's more about pricing, but from a financial perspective. So basically, because, well, my understanding is obviously, as you told us, all the markets, take America, take Europe, Asia, and they're very different in the way how they operate. But if you look at financial markets and commodity markets, the recent trend is basically, well, the emergence of financial speculators and kind of financialization of commodity markets when commodity becomes literally an investment asset. And what's your opinion? Does it make sense to look to talk, or basically to look into the effects of what people call it volatility spillovers from one market to another in terms of pricing? So say like the pricing in European market, financial market, will be affected by the pricing in Asia or something. Is it conceivable, or is it good? Because there are no, basically there is no research, proper research done in that respect. And in my view, it's interesting. It would be interesting to look at it.
I think it's really a very interesting question, and you are right. There are no special research, and that there is a very interesting study by Oxford Institute of Energy Studies on the price volatility at the spot markets, but these are spot physical markets, not financial. I don't think that there could be any visible influences between Europe and Asia, simply because there is absolutely no financial market for gas in Asia, and there is a very tiny spot market which is just evolving, and I think it will take like a decade before it will become more or less liquid just for physical supplies, not talking about financial instruments. But between, let's say, NBP and Henry Hub, we see already mutual influence. So NYMEX and London, they theoretically, in the future, especially when LNG supplies from the US will start, I think there could be some interactions, though I have no idea how they could develop. Even NBP and London Exchange, though they are the most liquid markets, physical and financial, in Europe, they are still lagging far behind North American markets. So in NYMEX, I think churn rate, it's about 500 or something like that. In London, it's 14. So it's still low, it's still underdeveloped compared to North America.
Thank you.
Okay, thank you. Maybe we could take one last question and then take a break. So Dr. Mitrova has been speaking for 2 hours already.
Once again, thank you for the presentation. What I wanted to ask you about was with regards to Russia's strategy to prioritize price maximization over the strategy to moderate the volumes they extract from the depleted fields. With regards to the near future, how prone do you think Russia would be willing to accept Chinese loans, let's say, to subsidize their industries, to increase their industrial output, or to stabilize the prices and the domestic prices, and in return, how reluctant do you think Russia would be in accepting the Chinese conditions, so lower either gas prices at below market rates or access to equity, maybe at favorable percentages compared to other international firms?
Yeah, fair question. I think it will be linked. I mean, Chinese loans and prices for gas, lower prices for gas, and potentially equity shares. We see already Chinese equity shares in Rosneft fields, gas fields in eastern Siberia, which is important. And there were these negotiations about non-interest down payment for Russian gas, which actually can be regarded as a loan. So we are observing all these schemes in the oil deals. Yeah, so I think it can be just logically applied to the gas deals as well. Yeah, I think it will be definitely part of the agreement.